America by Design, the story of the events and people that influenced American architecture and design continues with a program on The Street.
Always the road came first. Before there were houses, there had to be access.
Join Spiro Kostoff for a look at The Street next time on America by Design.
Saturday at 4 on Channel 9.
You're watching Channel 9, KETC St. Louis.
St. Louis-based Peabody Holding Company, the nation's largest coal producer, is proud to support Channel 9's broadcast of the Nightly Business Report. Peabody, 12,000 men and women, working together to help meet America's energy needs by mining and marketing coal, the nation's most abundant fossil fuel.
In our report tonight, the U.S. trade deficit edges down in December.
And stock prices take an upward move, with the Dow gaining more than 13 points.
The Nightly Business Report, produced in association with Reuters, the world's largest electronic publisher. Made possible by Digital Equipment Corporation, offering complete computing solutions to give every desk a window into your entire organization. By Kidder Peabody, one of the world's major investment firms, and GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By A.G. Edwards, members of the New York Stock Exchange, serving individuals and businesses through more than 340 locations. A.G. Edwards, investment since 1887. And by contributors to public television.
Good evening. Linda O'Brien is on assignment tonight. Well, the U.S. trade picture improved slightly in December as the merchandise trade deficit eased to $11.9 billion from November's $12.2 billion. During the month, both imports and exports reached record levels, but exports grew at a faster rate, going up 6%. New York correspondent Scott Gervey reports that the results led to the first yearly improvement in the deficit of this decade.
Imports exceeded exports by $11.9 billion in December, cutting the nation's trade deficit to $137 billion in 1988, a 19% improvement over 1987. But analysts are generally not encouraged by the news, noting that most of the change took place in the first half of the year.
The deficit's now deteriorating. The fourth quarter deficit as a whole was worse than it was in the third quarter. Moreover, there are some rather disconcerting trends.
A look at the deficit by group reveals that there was a surplus for food products, but a deficit of nearly $3 billion for industrial products, which includes oil. There was a surplus for capital goods, excluding autos, but a $5.5 billion deficit for autos and a $7 billion deficit for consumer products. The massive deficit for consumer products shows that America's appetite for foreign goods continues to grow. Analysts say Americans have little incentive to save, great incentive to spend.
Until the federal deficit is reduced and consumer spending is scaled back a bit and savings are increased much more substantially. So I think that's a long-term structural problem that's not going to be solved in any one year.
The geographical breakdown of the deficit shows that nowhere is the gap worse than with Japan. $5.4 billion in December, up $100 million for the month. Even with Canada, there is a deficit of nearly $500 million, and the deficit with the OPEC nations is running $800 million, a number sure to rise along with the rising price of oil during 1989. High levels of productivity in the continuing growing economy is adding to the deficit by causing the import of raw materials, and capacity constraints are forcing the purchase of more finished goods made overseas.
As people ordering goods are fed up with delivery lags and difficulty of getting goods from domestic producers, there may be a tendency to turn overseas for a product that could normally have been acquired here in the United States.
The analysts say that while imports are running at record high levels, so are exports, and both numbers should remain high through 1989 as long as the economy remains strong. In New York, Scott Gervey for the Nightly Business Report.
Turning now from the trade deficit to the budget deficit. President Bush today disclosed that he has set up a budget summit with congressional leaders for next Tuesday. The meeting at the White House will be the first direct talks between the president and key members of Congress on the Bush spending plan. And in a speech boosting that plan today at Washington University in St. Louis, Bush stressed his willingness to work with Congress on further refining the plan.
I am committed to working closely with my friends on the Hill to help them meet the target date set by Graham Rudman Hollings for an April 15th budget resolution. And together, we've got to make the process work.
Now, while Bush admitted that his spending plan isn't the final answer, he did contend that it does set the right priorities, as he put it, balancing social concern with fiscal sanity. Paul?
After some light profit-taking in the blue chip sector at the outset of big board trading today, following yesterday's 7.5-point gain in the Dow Industrial Average, stock prices began moving higher, partly in reaction to that December trade deficit report. Although the $11.9 billion trade gap itself wasn't a rallying point, the 6% jump in exports seemed quite encouraging. In any case, at 11 a.m., the Dow rose a little over 7 points as gainers took a 3-2 lead over losers. During the mid-session hours, the market staged a good rally after index futures moved to solid premiums over their underlying baskets of stocks, which of course set off a host of computer-driven buy programs. By 1 p.m., the industrial average was sporting almost an 18.5-point gain, while advancing issues held an 8-5 lead over losers. Bullish enthusiasm cooled a bit in mid-afternoon when the dollar weakened while oil prices rose. What's more, volume on the upturn was not particularly impressive. Even so, the Dow was still up just over 14 points at 3 p.m. With the exception of some activity linked to the expiration of some indexes and options, not much happened in the final hour as traders exited early for the long weekend. The Dow Jones Industrial Average did hold on to close with a gain of 13.39 at 2324.82. And for the week overall, the Dow was up 38.75 points exactly. The theoretical high of the day, 2339 and a small fraction, the low down around 2301. Notice the low above 2300. Trading volume today was down to about 161 million shares from yesterday's more active pace, but up volume exceeded down volume by a comfortable margin. The Dow Transport's doing well, up just over 3.5 points. Utilities edged up 0.29. The Dow 65 up nearly 4 points. The closing tick was a plus 347. Standard & Poor's 500 gained almost 2 points, better than a 2-point gain of the 400. The 100 up 1.30, and the Commodity Research Bureau March Index a big gain of 1.65. The New York Stock Exchange Index edged up nearly a point, value line up 1.30, and the Wilshire 5000 gained just over 16.25 points. A little early strength in the dollar helped the bond market edge higher early today as the December trade gap report, since it had no unpleasant surprises, prompted some cautious buying support. Trading activity was very quiet ahead of the long weekend, however, and there was no real chance of getting a head-turning rally underway. Nevertheless, all segments of the market ended higher, with tax-frees posting gains on the order of 3/8 of a point. Corporates and long governments managed to edge up about 1/8 on the average. The 30-year Treasuries rising 3/32. The Shearson-Lehman Long Treasury Bond Index up 0.60, and Fed funds closed at 9.25%. I'll be back shortly to show you where the action was on Wall Street today.
On the precious metals markets, gold tumbled in a lackluster pre-holiday market. Platinum closed firmly up, while silver inched higher. The dollar edged mostly lower in quiet trading after an early rally on the U.S. trade figures. The pound rose nearly 1/4 cent against the greenback. And oil prices rose 23 cents a barrel in New York and 30 cents a barrel in London, as early February figures showed OPEC members falling into line on lower production quotas. In Washington this weekend, the European community and the United States are to engage in important trade talks with the goal of resolving a dispute that began with the European ban on beef treated with growth hormones. Washington correspondent Dennis Moore reports that the two sides want to put the issue behind them to keep it from spilling over to other bilateral trade areas.
Headlines have made the hormonal imbalance between the U.S. and Europe the most urgent of their foreign policy differences, but they've also made it the most overblown.
We are right in suspecting the Europeans have used a science issue to cover the fact they don't want to cut subsidies. On the other hand, they are right legally in that what they have done is perfectly legitimate within GATT law, and it's the kind of thing that we have done in the past.
The Europeans say their restrictions on beef growth hormones are no different legally from American restrictions on automobile pollution. For both sides, it's mostly a domestic political problem, and there could be a compromise to prevent it escalating into a trade war as early as this weekend.
Neither side wants to let the hormone business get out of hand. It is not that important. It is not that important to the Europeans, and it is not that important to the U.S. in terms of overall trade interests.
The European governments have a long history of farm regulation and subsidies far greater than U.S. farm programs. So when the Reagan administration proposed a zero option on subsidies, elimination by 2000, the result was stalemate at the Uruguay round GATT talks.
The stalemate in December was a kind of setup. Both sides took extreme positions, and I think that you'll be able in April to move toward the center, as it were, or to move to compromise.
There are equally important disputes with the EEC over government subsidies for aircraft manufacturing and the refusal of state telephone companies to buy much American equipment. The farm problem has put a solution on hold.
In the absence of progress on agriculture, it is very likely that the whole MTN process will come to a halt and could fail.
The Bush administration trade negotiators haven't formulated a trade policy yet. The Europeans are representing a divided community. Both sides are calling this weekend's talks a get-acquainted session, and it's clear there's a lot of getting acquainted to be done. So much, in fact, that the next round of GATT talks in April may come too soon for the U.S. and Europe to make a deal. In Washington, Dennis Moore for the Nightly Business Report.
Well, a nice closing rally to end the week with on Wall Street, as we see the Dow Jones Industrial Average ending up 13.39, and for the week overall, up 38 3/4 points. Good move. That's 1.7%. 9 stocks up for every 5 down today. 51 new highs for the year, only 14 new lows. Topping the active list on 2 3/4 million shares, Navistar dropping an 1/8. Then Niagara Mohawk Power unchanged. That was ex-dividend last Monday. Kansas City Power and Light moved up 3/8 of a point, another dividend play. Union Carbide dropped 3/4, little profit taking. It has been strong recently. Then Fleming Companies, 5th in volume, showing no change. Church's Fried Chicken, which moved up 1 1/4 yesterday after accepting Copeland Enterprises' $11 a share buyout bid, $9.50 of it in cash, was unchanged today. Eastman Kodak moved up 1 1/8 points. Apparently, the company's bid to remove a judge in the Polaroid case failed. Texas Utilities was unchanged. Pfizer down 7/8, and RGR Nabisco, when distributed, edged up an 1/8, despite some rather negative comments in the Herd in the Street column in today's Wall Street Journal about it. Digital Equipment ended the week on an uptick with a 3/8 point gain. Gillette Company up 3/4 of a point. Solomon repeated a buy recommendation today. Sees strong sales. Incidentally, Gillette yesterday boosted its quarterly dividend from 21.5 to 24 cents a share. Hewlett-Packard, in anticipation of good earnings due out this coming week, up 1 1/8. And J.C. rose 1 1/8 points. The Kidder Peabody Brokerage repeated a buy recommendation there. Knight Ridder moved up 5/8. Late this afternoon, the company said it intends to sell 8 of its television stations for at least $400 million. TAM Brands down 1/4. Today, investor Donald Kelly disputed recent rumors that he was interested in making a bid for TAM Brands. And United Telecom moving up 1 1/2 points. The company reported strong 4th quarter earnings, and even its U.S. Sprint operation was profitable. Racal Telecom PLC, the British firm, listed on the big board, up 5 1/8 points after Goldman Sachs repeated a buy recommendation. The Bank of New York, a nice gain of nearly 2 points. The company, according to Standard & Poor's Market Scope, says it sees better than expected cost savings in the acquisition of Irving Trust. Kaufman & Broad Home Corporation was up 7/8 of a point after Prudential Bache put out a buy recommendation, and Reynolds Metals moving up 1 5/8. The company is boosting its quarterly dividend a handsome 60% from 25 cents to 40 cents quarterly. Kleinwort Benson, that's an Australian closed-end mutual fund. It was off 1 point today. A very negative article in the Wall Street Journal today about the recent sharp decline in the Australian dollar. Archer Group, which was up 4 1/2 points yesterday on news that its 26% owned Envirodyne may get a buyout bid, down 1 5/8, little profit taking. Over in the American Exchange, a gain of 0.80 in the index today. For the week overall, it was up 3.18. Volume just about the same as yesterday's pace, and a few more gainers and losers, about 50 or so. First Australian Prime Income Fund down 1/8. That's no doubt in reaction to that negative Wall Street Journal article about the weak Australian dollar. DWG Corp down 1/8, and Lionel up 3/4 of a point. Lionel is refusing to talk to Tusi Partnership, which owns 9.9%. Omdahl was up 1/8, and so was Keystone Camera Products. Penn Traffic Company up 1 point. Today, the company began its tender offer for Big Bear. And then MSA Realty Corporation falling 1 1/4. The company had a 4th quarter loss and cut its cash distribution by 40%. NASDAQ trading a gain of 1.49 in the index today. For the week overall, it was up 4.82. Trading volume well down from yesterday's pace, only 114 million shares. 11 stocks up for about every 8 down. The 100 index grows just over 1 1/3 points. Apple Computer topped the active list with a half-point gain, followed by Lynn Broadcasting edging up 3/8, and Sun Microsystems down 1/4. Intel rose 1/2, and so did First Executive Corp. MCI Communications down 1/4. Big Bear, which has this $38.60 offer in progress now from Penn Traffic, was down 1/8. Price Company moved up 1/4. Lotus up 1/2, and St. Paul Companies rose 7/8. Aldus Corporation up 1 point. The company's in the process of releasing some new software products. Apparently, they're meeting with the approval of Wall Street. AME Incorporated falling 1 3/4. The company's chairman has withdrawn its $13.75 buyout bid. And Eric's Corporation falling 1 1/8. The company said it's going to have a fourth quarter that'll be about 65% below last year's earnings on a 43% decline in sales. And that's our Wall Street wrap-up. Jim?
Well, Paul, in an effort to diffuse labor tensions at Eastern Airlines, a federal judge in Miami today ordered the air carrier's machinists union to end an alleged work slowdown, which Eastern claims has forced it to ground 17 planes. However, the judge also handed the machinists a partial victory by ordering Eastern to stop farming out maintenance work to subcontractors. Eastern and the union are in the midst of a federally imposed 30-day cooling-off period that ends March the 4th, when the union will be free to strike. Coming up on tonight's Market Monitor, Anthony Ludovici, Vice President of Tucker Anthony and R.L. Day.
Workers at Ford Motor Company, which yesterday reported record 1988 profits of $5.3 billion, will be sharing a $460 million piece of that pie in profit sharing. That's an average of $2,800 per worker, nearly 10 times what employees at number 1 automaker General Motors will receive. Still, the amount is less than Ford workers last year because the automaker's U.S. profits slipped $249 million from 87 levels.
Japan's insider trading scandal continues to snowball as prosecutors in Tokyo today arrested a former bureaucrat and searched his home and offices. The man who is being held on bribery charges is the first government official among the 7 people arrested in the scandal involving Recruit. That's a major Japanese information and publishing company. Recruit stock was reportedly sold at bargain prices to influential politicians, and the scandal has caused Prime Minister Nobuo Takeshita's ruling party to suffer setbacks in 2 recent elections. Texas Eastern stock today slipped 5/8, closing at 48.5 after a Merrill Lynch analyst reportedly suggested that Coastal Corporation might withdraw its bid for the company. However, Coastal, which is bidding $42 per share for the gas pipeline company, said it could raise its bid if Texas Eastern shows its assets are worth more or if a competing bidder surfaces. In any case, analyst Frederick Laufer doesn't think Coastal's present bid is very far off the mark.
I think Coastal Corp wants the company. I think the $42 bid was a fair bid. Understand that that bid was made at a time when Texas Eastern was selling in the marketplace for $30 per share. So it was a goodly premium to where the stock was trading. I think that Coastal's primary interest lies in the pipeline assets of Texas Eastern. They've already indicated that they would probably sell off the North Sea assets.
Laufer said that one potential problem that could scare away potential bidders is Texas Eastern's need to clean up PCB contamination along its pipeline. The company estimates that the cost of that cleanup at $400 million.
My guest market monitor this week is Mr. Anthony Ludovici, a vice president and senior investment analyst for Tucker Anthony R.L. Day Brokerage in New York City. He's with us in our studios, and welcome back to the Nightly Business Report, Anthony.
Thank you, Will.
You were the guy that said just shortly after the October crash, this too shall pass by, and it worked out wonderfully. As a matter of fact, on your visit, last visit with us, July 15th of 1988, Dow was 2129. You were still bullish. So you've made a lot of good calls, and I compliment you on that. Today's report on the December trade deficit. Now, I know that oil is your specialty, although you cover the market in general. But we saw a deficit of about $11.9 billion, which was as estimated. But that's $14 per barrel oil. It's now 18. What's going to happen to oil here?
Well, Paul, I don't see any sharp spike in the price of oil coming up. And if we go back over the history of the OPEC agreements, they've always had a tendency to be somewhat cohesive in the beginning. But as the price tends to appreciate somewhat, the temptation to cheat is really quite strong. And
but they're talking, the OPEC countries now are saying they're going to cut back. You don't believe that?
Well, I'd say they're going to make an attempt at it. And everything is relative to demand.
All right.
Okay.
So no sharp upward spike in oil prices beyond here.
Right.
Now, you said at the last visit in July of last year that you expected corporate earnings to be great in the second half of '88, first part of '89. Are you happy with what you see?
Oh, I'm very pleased with what I see. And this is what helps your stock market to move up to where it is.
Mm-hmm. What is your scenario, let's say, over the next 6 months for the market? Do you think we're going to have an upward spike in stock prices?
Well, that may be a spike. What I anticipate here is we've closed the gap at 2,200 on the Dow, and but the upward momentum of the market has been so strong that I anticipate another 10% move on the upside to roughly maybe 2,400, at which time we'll assess that situation again. And you might get maybe a 10% correction. But then again, that would be in the within the confines of an uptrend.
But you're not looking for any great crash or anything like that?
Oh, no. As a matter of fact, the General Motors theory, when General Motors makes a new high...
Right. We're good for the next 4 months,
yes,
anyway.
That's right.
All right. Now, let me ask you, what are you investing in? What do you think is attractive with the market at current level?
Well, I'm looking at companies with solid cash flows and good asset value. And in cash flows, I'm looking at USX Corporation, the old U.S. Steel. And here's a company that's going to earn better than $3.50 a share this year. Last year, their profit per ton of steel was $40, and it looks like it's going to be maybe $60 plus this year. They generate a cash flow of $10 a share. Stock is selling at 32. And
not much of a dividend yield, though, at this level, is there?
Well, it's
about 4.5%.
About 4.5%, which isn't too bad, but you can expect a dividend increase sometime this year, I believe.
Okay.
And they're buying back their own stock.
All right. What else do you like?
Well, I'm looking as an asset play. I've been looking at the SFX Corp, the Santa Fe Southern Pacific. And you got a very interesting situation here because management had come right out and said that since the merger between the Southern Pacific and the Santa Fe were not allowed, you see, they have to seriously consider what they're going to do with the rail. Because in order to compete in the rail industry today, you must be big. And they rank number 6, which is rather small.
Right.
So it appears to me, then, that the rail might be up for sale in due course of time. Now you've got the Olympia in New York, controlled by the Reichman family, by the way. Very heavy in real estate. And Santa Fe has tremendous real estate properties throughout the West Coast. Very valuable property.
Okay, so those are your two favorites here. Yes. USX and Santa Fe Southern Pacific.
Yes.
Listen, I'm going to listen to you. I'm going to look at those very closely because you've called the market very well in the last 2 years been with us. Thanks very much for being with us.
My pleasure, Paul.
My guest market monitor, Mr. Anthony Ludovici of Tucker Anthony, R.L.D.
In business notes, the Federal Aviation Administration says airline flight delays in 1988 at U.S. airports dropped to their lowest level in 3 years. The FAA says only 2 of the 22 major airports reported significant increases in delays. Those were Chicago's O'Hare International and Newark International. Well, in tonight's commentary, Charles Schultz, Economic Studies Program Director at the Brookings Institution, says President Bush and Congress must get together and share the blame for some tough budget cuts.
Last week, President Bush unveiled his budget proposals for the coming fiscal year and offered to negotiate with the Congress about them. Compared to the budget of the outgoing Reagan administration, the new budget shifts a small amount of spending from defense to civilian programs. That new budget also, unrealistically in my view, forecasts that President Bush's proposals to cut the capital gains tax rate will actually yield additional continuing revenue increases, thereby providing more funds for program spending and deficit cutting. In broad terms, however, the substance of the new budget isn't all that different from the one proposed by President Reagan as he left office. Its rhetoric and negotiating stance are quite different. The new budget identifies and goes on at great length to take credit for a number of popular spending increases proposed in President Reagan's last budget as well as some additional spending increases proposed by President Bush. On the other hand, the budget doesn't explicitly endorse some of the spending cuts that had been proposed by President Reagan, leaving to the Congress the choice as to where to make the politically difficult and painful cuts needed to finance both the program increases and the deficit reduction. To the Congress, it appeared as if President Bush had proposed a sharing of responsibility under which he got the credit for the popular spending increases and they took the heat for the unpopular spending cuts. In fact, what's needed is an agreement in which each side shares the responsibility for the politically onerous job of making the spending cuts and proposing the tax increases that are needed. But neither the executive nor the Congress have yet reached that point. And until they do, we shouldn't expect to see really large budget deficit reductions. This is Charles Schultz.
Recapping tonight's top stories, a surge in exports helps to cut the merchandise trade deficit in December, but demand for imports remains strong.
The trade news helps Wall Street to end the day without a deficit as the Dow Jones Industrial Average gains more than 13 1/3 points, ending at 2324.82.
And looking ahead to Monday, the markets will be closed for the President's Day holiday, but we'll be here with a special program marking the 10th anniversary of the Nightly Business Report and the economic events of that decade. And now, with tonight's last word, here's Paul.
Taxpayers who intend to use their President's Day holiday to prepare their 1988 tax returns will be glad to hear that the IRS tax assistance will be available that day by telephone at 1-800-424-1040. But apparently, taking the IRS's advice has some of its risks. Money Magazine reports that it made 100 calls to the IRS with basic tax questions and got 59 correct answers and 41 wrong ones. Well, at least that's an improvement from last year when 45% of the IRS answers were wrong, onward and upward.
No comment. And that's it for this edition of the Nightly Business Report for Friday, February the 17th.
For all of us, good night.
The Nightly Business Report is made possible by A.G. Edwards, providing financial services through more than 340 locations. A.G. Edwards, a century-old tradition of putting the customer first. By Kidder Peabody, one of the world's major investment firms. And GE Capital, providing business with comprehensive financing. Two companies of GE Financial Services. By Digital Equipment Corporation, offering complete computing solutions to give every desk a window into your entire organization. And by contributors to public television. Reuters, the world's largest electronic publisher, provides the Nightly Business Report with news, market data, and communication services worldwide. For a transcript of this program, please send $4 check or money order to NBR Transcripts, WPBT, P.O. Box 2, Miami, Florida, 33261-0002. Please include the date of the broadcast.
St. Louis-based Peabody Holding Company, the nation's largest coal producer, is proud to support Channel 9's broadcast of the Nightly Business Report. Peabody, 12,000 men and women, working together to help meet America's energy needs by mining and marketing coal, the nation's most abundant fossil fuel.
Illegal drug profits add up to $100 billion a year.
They will smuggle the cash out of the country the same way they smuggle the drugs into the country.
Meet some of the bankers, lawyers, and accountants who mastermind the money laundering. Frontline follows a federal investigation of the illegal money trail into the heart of the mainstream economy.
There are legitimate businesses taking advantage of the currency that's out there.
Watch Who Profits from Drugs on Frontline.
Tuesday at 9 on Channel 9. Channel 9 is having a celebration, and we want you to join us. Look for this in your mail soon. It's your invitation to join in the celebration of Channel 9's 35th anniversary of providing quality television. For 35 years, Channel 9 has brought the very best in TV programming to all of St. Louis. And for 35 years, our members have been with us, supporting our efforts. So when you receive this, open it, and then join us as we celebrate 35 years of quality. 35 years of Channel 9.
She was a poor black girl from the Midwest, yet she shocked and captivated the world with her exotic performances. Her name was Josephine Baker.
She wasn't beautiful, but she was fascinating.
Follow her incredible story from the slums of St. Louis to the Cotton Club, from Paris nightlife to the French Resistance to the American Civil Rights Movement.
And let me tell you, Josephine was never boring 1 minute.
Don't miss Chasing a Rainbow, the life of Josephine Baker.
Monday at 8 on Channel 9. Tomorrow, Channel 9's William Holden double feature enters the boardroom in Executive Suite. Then bear witness to a budding romance on Dear Ruth, tomorrow starting at 8 here on KETC.
Night has faded over Collinwood, but for one woman, the darkness still remains. Elizabeth Stoddard